Hey everyone, welcome back to Mark Loeffler Experience. Today, and today only, we're going to talk about inflation. Well, that's not true. We're probably going to talk about inflation a whole awful lot coming up, and we have talked about it in the past. Well, because, that's what everybody is talking about, right? Why? Why do we talk so much about inflation? Well, number one, if inflation is rising, they're going to raise interest rates. They've been very clear about this. So this helps indicate where we are going with the short-term interest rate raises from the Bank of Canada. And it will mean that you can now judge moving forward whether it's going to be more costly to buy something next month, or maybe we're saving that money because, hey, prices are going down. So this is a news article from CNBC. Wholesale prices fell 0.5% in December, much more than expected, as retail sales fall again more than is expected. So this is all December numbers from the States. And why is this important? Well, number one, goods are actually getting cheaper, right? So the goods are cheaper, which again is deflationary, which would lower inflation. Right? You're going to have some deflationary stuff and you're going to have some inflationary stuff. And retail sales, so the interest rate increases are having the effect on the demand side, and we are seeing stuff, China is opening up again, obviously with COVID and they said, oh, screw it, we're going to let COVID run rampant and just open up the economy again. So therefore, they're producing a whole bunch of stuff again. So okay, what do we know about supply and demand? Right, supply is going to go up because there's going to be more goods that are going to come in from China that they're going to make, and they're crushing demand. Crushing it, strong word, but yeah, they are purposefully slowing down demand to lower the inflation rate. They've been very clear about this. They're not mincing words. They're not mucking about here, right? So obviously we know that energy prices are cheaper now than they were. They've kind of gone up and down a little bit. But final energy price index plunged 7.9% from November to December. Retail sales fell 1.1%. Inflation basically rose 6.2%. This is in the States. We'll go through some Canadian numbers in a minute as well. But we are so tied to the US that we're going to be super close to what they are. And at the end of the day, if they're still raising rates, the Bank of Canada, the Bank of Canada care? They care a little bit about because that affects our currency, and if it affects our currency, then that's going to affect how much we pay for things that are coming in from outside of Canada. So that was the U.S. What's happening in Canada? What are we going to look for moving forward, right? So we had a 6.3 in Canada in December, right? Which is, as you can see from this graph, we're trending correctly, right? We peaked in June, 8.1%, and we're slowly diminishing, right? July, August, September, which we kind of flatlined through there, and that's what made them say, oh, we probably need to raise rates a little bit more. So, we're getting that big drop again. And the other thing I'm just going to point out is it's kind of like the housing market in some respects that peaked in February. Obviously, inflation peaked after that here, but year-over-year price increases are going to be much smaller moving forward. Because, they had 8%, they had 6.57, 6.7, 6.8, 7.7, and if those prices are decreasing, we're going to have a much smaller increase. It's like the house prices, what we talked about on last Monday's video, where they raised the house prices in February to February. It's going to look like a gong show. It's going to be 35-40% drop, which is fair because that's what it is year over year. With that bigger number, it's going to be much more dramatic. So it's going to show much better in the stats, and that's what they're looking for, basically. So how does this affect interest rates? Well, all the experts are calling for a quarter point rise this week in interest rates, and then probably another one in March, and then nothing. We were at the RBC Economic Outlook last week, and they think they might actually decrease rates by the end of the year. I think the Bank of Canada is going to be gun shy and they're not going to decrease rates. They're also calling for a soft landing, which if that happens, they say we're going to see a mild recession for 2 to 3 quarters, that we might already be in one, and that we're going to come out of it pretty quickly. Again, time will tell. These are very smart people who are doing this, and this is what they do for a living. All signs are pointing to, it being cheaper sooner rather than later. That we're in a bit of a deflationary, that's what they're doing. They're deflating the inflationary bubble that we've been in. This is what they wanted to do. They're right on track for what they want to do. They think they're winning. I actually think they're doing a really good job of it this time. I was a little critical that they should have started interest rate increases a little, obviously, sooner, but hindsight is 2020. And, if you could look back on everything, everybody would win all the time. So that's it. So what are we doing in this environment? Well, again, we're picking up deals in real estate. The deals that I'm seeing right now, I haven't seen in a long time. Somebody I met this weekend's buying a 43 unit in Toronto at just over 200 a door. Our London property that we put a deal on is $145,000 a door. There's some deals happening out there. So if you're not looking, what are you doing? All right, everyone. Thanks so much for watching. Hopefully we'll see you, if you're at our investor event and you're not watching this right now, but follow us on Instagram. Look out for our investor meetups every month. We'd be great to see you guys there, and we'll catch you next time. Thanks, everybody.